But for the latest, we now cross live to New York, where our U.S. business correspondent Caroline Woods is waiting. Caroline Woods, Happy New Year to you. Now, let's start off. Apple is out with a rare update about its outlook. What's the iPhone maker saying?
Hey there, Jane. Happy New Year to you as well. Yes, rare is right. For the first time since before the iPhone was launched back in 2007, Apple slashed its quarterly revenue forecast. This is an unprecedented move in the Tim Cook era and renews concerns about slowing demand for Apple's prized product, the iPhone, which of course makes up a huge portion of its revenue. Now, looking at the numbers, Apple cut its revenue forecast to $84 billion in its fiscal first quarter, ended December 29th. That's below analyst estimates of $91.5 billion, according to Refinitiv. Apple originally forecast revenue of between $89 and $93 billion. Keep in mind, this is the key holiday quarter. Now, as for what prompted it, Cook placed blame on falling sales in China as well as the trade war. It, of course, has meant high tariffs across hundreds of different products and commodities over the last several months. And this really underscores how an economic slowdown in China has been sharper than many had expected or feared. Now, Apple also finds itself in a tricky position in China. It's a key market for sales, and it's also where it manufactures the bulk of its products. But after that high-profile arrest of rival Huawei CFO in Canada last month, which was at the request of the U.S., there have been sporadic reports of Chinese consumers shying away from Apple products. And even before then, actually, local rivals like Huawei had been gaining market share over Apple. Now, Cook told CNBC that Apple products have not been targeted by the Chinese government, though some consumers may have elected not to buy an iPhone or other Apple device due to the firm being an American brand. Cook said the much larger issue is the slowing of the Chinese economy and the trade tension that has further pressured it. Now, some analysts, however, blame Apple's high prices for its products. Price points for the newest iPhones have passed the $1,000 mark, which in some cases is almost 3 times as expensive as phones from other vendors. I will say, although rare, this shouldn't come as a total surprise. Stopped unit sales data, leading many analysts to worry that a drop in sales was coming. And then several parts makers, chip makers, forecast weaker than expected sales, which prompted further concern. Also in November, you may remember Cook cited slowing growth in emerging markets such as Brazil, India, Russia for lower than anticipated sales estimates for the first quarter. However, Cook specifically said he would not put China in that category of countries with troubled growth, but in this letter to investors released last night, he said while Apple anticipated some challenges in key emerging markets, it did not foresee the magnitude of economic deceleration, particularly in Greater China. Apple is now the highest profile multinational corporation to warn that the economic slowdown in China could hurt its business. Automakers such as Ford and Hyundai and Nissan all previously said they planned to cut production in the country. So we're really starting to see the effects of this U.S.-China trade war, and they're widespread.
All right, Caroline, what do you think this could mean for the market, seeing that impressive comeback yesterday?
Well, when the news broke last night, it sent Apple shares tumbling in after-hours trading. It was down as much as 7.5%. I've seen it as low as 9% lower in pre-market trading this morning. I will say Asian suppliers got hammered today, and this really triggered a broader sell-off in global markets. In terms of the U.S. futures, well, they're sharply lower across the board. I'm just seeing a sea of red here. The tech-heavy NASDAQ could see a lot of weakness today. It's down 1.8% with just under an hour to go before the opening bell. The S&P 500 is down about 1%. The Dow futures are down about 1.1%. Definitely keep an eye on chip makers today, like Advanced Micro Devices, NVIDIA. They're likely to see weakness on this. And as you said, we did see this impressive turnaround yesterday, the first trading day of the year, with the majors all erasing early sharp losses and closing modestly higher. This also follows a dismal 2018, with the NASDAQ losing about 4%, the Dow sinking more than 5%, and the S&P 500 tumbling over 6% last year. So bad news from a big company like Apple isn't the best way to kick off this new year. I will add there are a few other factors that could influence markets today. Ford, Fiat Chrysler, and others are releasing December U.S. sales figures. So those could, if they came in better than expected, they could move the markets. We're also getting jobs data. I just saw the headline come through. It actually came in. The private sector hiring was better than expected, 271,000 jobs added versus 178,000 that were expected. The better than expected economic news could signal continued strength in at least the jobs market. Could maybe boost sentiment. We're also getting some manufacturing data due out actually any minute. It may have just come out. So that could, of course, be impacted by the trade war, falling oil prices, market volatility. We'll have to wait and see.
All right, Caroline, to be honest with you, I'm trying to find the positive in all of this. Now, Apple's sinking shares may be a wish come true for a particular investor. Can you tell us who that investor might be?
Yes, if we're trying to look on the bright side of things in this new year, it can be a New Year's resolution. This may be a wish come true for the Oracle of Omaha himself, Warren Buffett. Back in May, the billionaire said he would love to see Apple shares decline in price so he could buy more. Well, his wish will likely be granted today if pre-market trading is any guide. Buffett has said he regrets missing the boat on buying shares in some U.S. tech giants, and he's admitted some mistakes too, like saying an earlier investment in IBM wasn't one of his best. Yet Buffett has made Apple a centerpiece of his portfolio of other companies' stocks. Buffett sees Apple as a consumer stock more than a tech stock, reflecting the iPhone status as a must-have possession for so many people, including myself. Now, including its after-hours drop on Wednesday, Apple's stock market value has tumbled to below $700 billion from over $1.1 trillion at its peak in October. But even though it's fallen behind Amazon and Microsoft in value, it remains one of Wall Street's most widely held companies. Meanwhile, shares of Buffett's company, Berkshire, have held up quite well, even as the broader market sank last quarter. I did see CNBC was crunching some numbers this morning and said if Apple opens 8% lower like it's looking to in the pre-market, as I can see right now, Buffett could lose some $3 billion today alone. However, if you look at Bloomberg's Billionaires Index, he's number 3 on the list behind Amazon's Jeff Bezos and Microsoft's Bill Gates with a net worth of more than $83 billion. So, Jane, he's doing something right.
I couldn't agree less. Now, let's turn to politics. The new Congress is sworn in today, with Democrats taking over the House, though the government remains shut down. Can you tell us the latest on that story?
Well, it's day 13 of the government shutdown, so we're almost at that 2-week point. The new Congress will be sworn in today, as you said, and in their first action in control of the U.S. House of Representatives, Democrats will take up a bill on Friday to end a federal shutdown. The funding measure, though, will not include the $5.6 billion in taxpayer dollars demanded by President Trump to build that wall on the border with Mexico. Now, the move by Democrats effectively dares Republicans to vote, as they have in the past, to keep the government operating or side with a president who seems to be refusing to budge without this wall. The president has really stood firm with his demand. He's adamant that he won't sign a bill that doesn't meet his demands. He told reporters that he would keep the government shut down for as long as it takes. He took to Twitter yesterday saying, sadly, there can be no real border security without the wall. Now, the Democrats' funding bill closely resembles one that passed with overwhelming bipartisan support in the Senate. So if Republicans don't vote in favor, they may be blamed for the shutdown. Congressional leaders said they would return to the White House on Friday to resume talks with Trump. So that's a sign that the government is likely to remain closed for the rest of the week. The shutdown is, of course, affecting nearly a quarter of the federal government and 800,000 federal employees, many of whom are furloughed or working without pay. So it's a tough time for many people.
All right, I hope that next week is going to be better with regards to the shutdown. Now, there's something else Trump might be upset about, and that could be, higher prices in drugs. Can you tell us more on that?
Yes, drug makers kicked off 2019 with price hikes on more than 250 prescription drugs here in the U.S. This includes the world's top-selling medicine, Humira, which is an arthritis medication. The pharma industry has been under pressure by President Trump to keep prices steady as his administration works on plans aimed at lowering the cost of medications for consumers in the world's most expensive pharmaceutical market. Allergan was particularly aggressive. It raised list prices on more than 50 drugs, and more than half of those by 9.5%. That's according to RX Savings data. During a White House meeting with members of his cabinet yesterday, Trump said he expected to see a tremendous decrease in drug prices. I will say the pace of price hikes was slower than last year. The overall number of price increases was down by about a third from last year. However, more price increases are expected this month. Reuters reported late last year that nearly 30 drug makers had notified California agencies that they plan to raise list prices of their drugs. Not all of those increases have been announced just yet. The U.S. leaves drug pricing to market competition, which has higher prices in other countries where governments directly or indirectly control the costs. This makes it the world's most lucrative market for manufacturers. So drug makers clearly defying President Trump. We'll see how he responds this time around.
All right, then. Thank you so much, U.S. business correspondent Caroline Woods, all the way from New York.